Record revenues propelling Juniper Networks to a Q3 earnings beat. Provider of automation, AI, and cloud-delivered and software-based technologies. Juniper Networks CEO Rami Rahim joining us now. Rami, good to see you, sir. What did we learn in the quarter?
Well, it was a great quarter. We had record revenue for the quarter, record enterprise revenue. We had double-digit growth rates in all of our strategic verticals, record software, record ARR. So I'm delighted with the execution of the team. I think we've got some great technologies out there, and it's really working for us.
Rami, when we take a look over the next couple of quarters, obviously we're in an environment where some businesses are beginning to pull back on spending. Are you seeing that happen at all? And what are you seeing? Are you seeing any orders be canceled yet?
You know, we're seeing some customers scrutinize their budgets a little bit more and the timing of their projects. But by and large, I'm delighted with the order momentum and the demand dynamics that exist in the market today. I think we have seen no cancellations, maybe a few pushouts. I really do believe that we have a very large market opportunity, and we have a very differentiated technology solution about AI-driven operations, AI-driven experience, and the ability to grow share, even in an environment where we might see some pullback in spending. But so far, we haven't really seen anything.
Rami, much ado about the Azure Cloud numbers from yesterday. What are you seeing in the cloud space from your own numbers?
So our cloud customers are very important to Juniper Networks, and our cloud business has been performing very well over the last few years. I honestly don't pay too much attention to the results of any given quarter because, generally speaking, cloud providers' business is doing exceptionally well. In the long term, they will have to continue to invest in their network infrastructure to keep pace with the insatiable demand from consumers and enterprises for cloud services. And we power many of the cloud networks that are out there, all of the hyperscalers, many of the tier 2, tier 3 cloud providers as well, with great technologies for automation, ASIC technologies that drive capacity requirements for our customers. So I'm delighted with the performance that we're seeing in the cloud space.
Speaking of performance, we have a 3-month chart up right now, but if you take a look at how the stock has fared year to date, clearly outpacing so many of your rivals out there, what do you think Juniper has done to really better position yourself than some of the major competitors? Because you're off 15%, but when you compare that to some of the massive losses that we're seeing within the tech sector, it looks pretty good.
You know, the future of networking is around AI-driven operations, and this is where we have performed exceptionally well. You know, we saw our enterprise business grow double digits, both from an orders and a revenue standpoint. And the magic, the secret sauce here is our AI capabilities that is crushing the cost of running networks for our customers, as well as vastly improving the end user experience of using those networks to do practically anything today. That differentiation is working for us in the market today better than it has in the history of our company.
The release cites a worldwide shortage of semiconductors and other components. You also say we're experiencing ongoing supply chain challenges. Can you talk about those challenges, and do you see them improving on the horizon?
We grew revenue in Q3 19% year over year, which means that roughly speaking, we shipped 19% more volume of products this quarter than we did a year ago. So clearly things are improving, but they remain challenging. And in fact, we're sitting on a record backlog for the company, which means that there are a lot of customers out there that are waiting for their products to be shipped. I do anticipate things to start to get better, not completely normal, but better next year. We're obviously working very closely with our strategic suppliers to understand what the dynamics are like. And we've invested in our supply chain to keep pace with, or as close as possible with, the demand from our customers. That's worked for us in Q3. I expect it to continue to work for us through the rest of this year. And I think it should get better next year.
Rami, you mentioned earlier that you haven't really seen a slowdown, at least when it comes to some of your customers out there in this weakening economy. But more specifically, what does it mean for your business, for your growth? Because here we are up against a strong dollar. Rates are rising. How are you adjusting?
So we are, in fact, making sure that we're pivoting our investments to areas of the market that are going to be most resilient to any sort of economic downturn, even if we don't necessarily see anything just now. You know, we are, in fact, looking at investing in new areas in our go-to-market organization and our technologies that could make us more resilient in the event of that downturn. So, for example, public sector, college campuses, healthcare are new areas where our technologies are really, really suited for. We just have to pivot our sales motion, our playbooks in that direction. And I think that sets us up for success, even in the event of a downturn.
Rami Rahim, CEO of Juniper Networks, thanks so much for joining us.